I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this podcast is different than everything else out there. I bring together a new and an experienced investor on each episode, and I let the aspiring investor ask the questions that they need answered. So if you're an aspiring investor yourself, you probably will have the exact same questions. Now, before we get to this episode, make sure you hit the subscribe button below and that little bell to make sure you get notified every time we post a new episode. And now, enjoy the show. What advice would you give an aspiring investor who's maybe 6 to 12 months behind you?
If you're thinking of doing it and you know you should do it, but you're scared, don't be scared. Just do it. I would highly recommend either finding yourself a mentor, finding yourself somebody experienced. It's worth the money to pay to get that experience. And third, I wish we had started educating our friends, our investor database, talking about what we're doing earlier.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's show. We've got a husband and wife partnership here, partners in a couple different ways. But we got Cory and Amy Whittaker with us today. I'm very excited to talk to them about their first deal. So Cory, Amy, welcome.
Thanks, Brian. Really excited to be here as well.
Thanks for having us.
Yeah, absolutely. So I remember we met at a networking event. So, I think networking events are awesome. I love how many good people I get to meet, but was happy to meet you guys. And like I said earlier, I'm very happy to have you on the podcast, and let's talk about your guys' deal. But before we do, let's talk about you guys. So if you do us a favor, tell us a little bit about your guys' background and history.
Oh God, that's a hard question because of such a diverse background.
Yeah.
I started in the administrative side of corporate America, doing a lot of data entry and accounting, payroll kind of things. And then I had a career change, became a yoga teacher. And then after that became a health coach.
Okay.
So that's where I was when we started investing in multifamily.
Okay. Cory, how about you?
Sure. I have a less diverse background, but almost. So most of my career has been in high tech. I've been a software engineer, so kind of a geeky role for a lot of years, and really enjoyed the creativity of doing that. A little bit after Amy, actually around 2016, I got laid off from my job. Took not a job. I actually became a realtor for a couple of years.
Okay.
I wanted to try and do some sales, try and just do something completely different. So did that for a couple of years, and then for a variety of reasons, went back into the corporate world where I'm at right now. So I'm working as a consultant for an larger IT company.
Okay. Interesting. Yeah. I mean, it's interesting, what diverse backgrounds come into this business, but I think a lot of people have, different ways of looking at it and different skills that they bring to the table. I don't know if yoga instructor helps very much, but your admin role, previous to that probably did a lot as well. But so how about this question? What got you guys into apartment investing?
Okay. Can we take that?
You go for it.
Yeah. So a lot of the years later on in corporate, I would spend a lot of time daydreaming how to get out of my job. So there's a lot of schemes and ideas, et cetera, that I just didn't have the courage to go through with. But I think when I became a realtor, I got more interested in the investing side of real estate. So started listening to some podcasts, and Amy and I we actually ended up owning a commercial, smaller retail / office building. So we kind of got our feet wet there, but I wanted to introduce Amy to a little more, scalable type investing. So we were going to do the smaller multifamily, et cetera. But what happened was I started listening to the real estate guys, and they introduced me to, hey, there's other ways to other types of investment, other ways, et cetera. So it kind of, in my mind, I could never do larger multifamily, but learning through them and some other people that, it's a team sport. It's not just one individual. It's like, oh, this is really doable. So that was my introduction. How about you?
Now, when you say you thought you couldn't do the larger multifamily, was that just like a little mental block that you had, or what?
No, I think it was more lack of education. It was along the lines of, hey, it's big banks own it, rich, the billionaires own it. I wasn't educated enough to realize about syndication.
Yeah. I remember, something similar, reading Rich Dad, Poor Dad many, many years ago, and he talks about commercial real estate. And I had a very similar reaction, is like, that sounds great for him, but I can't do that, and it was, for me, it was a little bit of both. There's a little bit of mindset and a whole lot of lack of education. But anyway, yeah, so that's the similarity I had right there is, I didn't think it was accessible to me up front.
Exactly. Yeah.
So you decided wanted to get into something larger, something a little more scalable. What steps did you guys take to learn the business?
I think it came from one of the podcast episodes Cory was talking about. They had a guest on who was promoting a mentorship group in terms of learning how to underwrite and how to syndicate into larger multifamily properties. So we joined that group, and then from that we got our education in underwriting and in looking for apartment properties.
Nice. Now, what support did that group offer? And I think what did you guys really take from that mentorship? Because a lot, I guess why I'm asking that question is, a lot of people are kind of anti-mentorship, think it's like a guru hoax. What was your experience like? And I guess really, did you get what you expected out of it?
I joined a mentorship program for a smaller multifamily a few years back and didn't have a great experience. But what I realize now is that I didn't have a great experience because I didn't take advantage of it, and I didn't do the work. But with this, we really dedicated ourselves to taking action, to doing the work, to following through. We spent money on it, obviously. I would say it was well worth the money. I don't think we would be owning a property this size if we hadn't had help, mentorship. And it's not just the mentorship itself, it's actually meeting other people within the group. So getting support from people who have been through it, people who are going through it right now. Yeah.
Well, what I noticed when I did my mentorship, and I did one of the higher price mentorship programs myself, but a couple of things is paying the bill for that, I think did more to commit me than a lot of other things. There's something about the high price. There's something about writing, for me, it was a $25,000 check that really makes you think, am I committed to this? And then, 2, 3, 4 months later, when the going gets tough, it's like, well, I've already sunk 25K into this. I better put enough effort in to get my money's worth. But, and then the other thing that you mentioned is the network. Something that was useful for me was when I would see other people succeed, or see people who are 2 or 3 years ahead of me in the program and be like, you know what, I'm just as good as they are, and realizing, hey, he's a pretty normal person. He's got 800 units. It's like, I'm a normal person. I can do that. So yeah, I think those are a couple of the benefits I saw when I did my own mentorship. So a lot of similarities there too.
That's a really good point about seeing the normal people. That's exactly what we said. We're like, we're meeting people who are just regular people. A lot of them have jobs just like we do, and they want to get to the same place that we want to get to, but for different reasons.
Yeah, I think a lot of people, Cory, just like you, are scheming to get out of their jobs. I think that's a lot of people are in that position right now where it's just like, I don't want to do this for the next 20 years. How can I? And then they land into multifamily. So I think that's a common way into. So well, that's it. Let's talk about your deeper motivation, what I like to call your big burning why first, and then we'll jump into the apartment. So what is your big burning why?
Actually, for me, it was my father's health. Being able to avoid his path, as well as to help support him with his needs. So to explain that, he basically spent 30 years at the same career. This is back, back in the day when you committed to one job and that's all you did for your life until you retired. That he followed that path faithfully, and so as a result of all that work, he actually ended up having health problems. And, he had plans to enjoy his retirement with my mom and doing like this grand vacation in China. And that's not coming to fruition because he's not able to do it physically. So the idea of passive income from these investments is to help us get away from our W-2 jobs, so we're not in that same, hamster wheel as my dad was. And plus I can take care of my parents. For me, that was my why.
Yeah, I love it. I love it. Cory, anything different for you?
Yes. And then I'll try to articulate this so it makes sense, but it goes along lines of scheming to get out of work. I had this burning desire to do more in my life, if that makes sense. And trying to do things and then falling back and just being afraid and not doing them several times over and over and over again. And I think this was, I ran into a kind of a health issue, and it got to the point where like, okay, I felt my mortality, and I'm still youngish. I'm in my 40s. I'm like, this is ridiculous. I need to do something. So this, to me, it was about, reaching the potential that I could really reach, because I don't want to get to be 80 years old in my deathbed and be like, oh man, that was a giant waste. I wish I could do it over again.
Yeah. I thought hard about a lot of things. Somebody asked me a question, what is my biggest fear, and I don't know. I spent 20 years in the Marine Corps, so I'm not supposed to be afraid of anything. Right. And that's kind of built into our culture, kind of the male bravado. You're not supposed to be afraid of anything, but I really started thinking about it. And I think my biggest fear is not reaching my potential. And I think you brought that up is, I don't want to be 80 and look back on my life and say, I came nowhere near my potential, and it took me a long time to kind of realize that's my biggest fear, is that, when I'm 80 years old, I look back and I just say, I did not reach my potential, so anyway, I think that's, yeah.
Thank you for reaffirming and sharing that. So that's, I'm not the only one.
Yeah. So that's my number one fear. Besides, my wife or one of my kids dying. I mean, I'm not horribly afraid of that stuff too. But if you look at me and just what I'm afraid of, that's it too. But anyway, that's in case my wife or kids listen to this. I'm right. It's true.
Do they know?
Yeah. Anyway. So let's talk about this deal right now. So it's 166 unit apartment complex, Kansas City, Missouri. And if I understand right, C-class value add in a B area, which is super nice. So how did you guys, first of all, before we talk specifically about how you found it, let's talk about the team, how the team came together, and then, how you guys found it.
Okay. If you want to take it, too.
I guess I can take it. So with the mentoring group, it was kind of encouraged to have accountability partners who could help you like study and help practice the underwriting. And so we knew we wanted to focus in Kansas City because it's closest to us in terms of a big city. We found a couple who lived there who was basically starting out at the same time we were. And so we decided to sign up together as accountability partners. So we signed up onto brokers' emails to get on their mailing list. And we came across this listing and we just started practicing underwriting. And then we said, wow, numbers look actually pretty good on this.
Surprise, right? Yeah.
Right.
We this is a little bit later on too. I think we'd been in the program for a few months, and we both were, I wouldn't say we were floundering, but we didn't have the momentum that we wanted to. So we reconnected after a few months back in August, and we're like, all right, we're setting our goal. We're going to get our first our first property. We're going to get it by the end of this year. So we really pushed each other to do that.
Nice. I like it. So, so you guys were in this group together, this accountability group. You started underwriting things, and you finally found a deal that penciled. All right. So, assume you guys did your little celebratory dance like most people do, and why, right?
Oh yeah.
Now, do you guys know what the competition was on this deal? Maybe was yours the only LOI in there, or do you think there were several offers? Do you guys know?
We don't know for sure. I do know that in best and final there was I think four in best and final. So if we can believe the broker, he told us I think there was like 14
Yeah.
or so. Yeah.
And that's a good question. Can you believe the broker? I've got a love-hate relationships with brokers in general. So I've caught them in lies before, just to try to trump up prices. And it's anyway, like I said, love to hate them.
Exactly. We need them though.
If you can believe the broker, there were 15 and there were 4 in the best and final.
Right.
Now, what do you think why do you think they selected your deal or your offer?
I think it's because we met their asking price. I think in being aggressive with our pro forma, and we were able to make the asking price make sense.
Okay.
And that came at the assistance with our experienced partners. He's like, you know what, you can do this. And if it weren't for him and telling us that it's possible, we probably would have underbid and lost it.
Yeah, and that's a good point. You brought in experienced partners. They're looking over your shoulder, and they're able to tell you where you can be more aggressive, and how you can meet the prices. So, it's not an issue of, everybody talks about conservative underwriting, right? It's hard to be super conservative and get deals, but I think you need to have realistic underwriting. All right, conservative is nice, but we're not in a market where conservative wins. But you had that experienced partner who was able to point out, hey, yeah, you can be a little aggressive here. You can be realistic. Here's what it's going to look like. And okay, now were they committed to partner with you on this deal when you put the LOI in, or did that come in later?
No, we put our LOI in, our first LOI. That was, and I think we bid about 400,000 under what the asking price was. Asking price was 14.1 million. We bid about, I think, like 13.6 or 13.75 maybe. And so we were accepted in the best and final. Realized that in order to actually get the deal, we need some experienced folks. So we asked around for people within the mentoring group, if people were interested. And one of the experienced partners is actually a coach within the mentoring group. So kind of a win-win there. He took a look at the underwriting. They had wanted to get into Kansas City and hadn't been able to yet. So they liked the underwriting, they liked the deal, they liked the area. That's how that happened. So
win-win. So basically you created a very healthy win-win situation. You're the mentors, the coaches were looking to get into Kansas City. You guys have a Kansas City deal. You need their help, and you're giving them something that they absolutely want. It's like, hey, this gives me a foothold in the Kansas City market.
Right.
Yeah.
Nice. It's nice when that works. So,
yeah.
Okay. So you got the deal. Experienced mentors come in and help you out. So let's talk about getting the deal, from contract to close. And I think one of the biggest things that comes with a syndication like this, or comes with a large property like this, is capital raising. So let's talk about your guys' capital raising experience. How did that go?
We were optimistic at first, as being our first capital raise. We had done our best, networking within the group, thinking that the people within the group would support fellow members. But it may have been because the market is so new. This mentoring group is based in Texas. So They're mainly focused in Dallas, Houston, San Antonio,
Yeah.
all the Texas cities.
Yep.
So to go to a state that's not as well known to them was kind of maybe.
Yeah, it is outside of their box, and you're not the first person. And just for people listening, it's the Sumrock Group. I mean, once you said Texas, I think most people triggered that. But I have had a couple other people on this podcast as well with saying the exact same thing, that if you're looking at a deal outside of Texas, it's hard to get support inside that group. But if you're looking at a deal inside Texas, a lot of times you can get your deal funded like that, which is one of the magical things about their group. But anyway, so you were expecting a little more support from inside. Go ahead from there.
So it didn't pan out as well as we had hoped. By 2 weeks after opening the subscription window, our experienced partner said, "You know what? I think we need help."
Yeah.
So yeah, that's when he reached out to a equity broker to have him look for a party that would be interested in writing a relatively small check for an equity party.
Yeah. Yeah. And equity, I mean, a relatively small check. How much did they bring to the table?
3.8 million.
3.8 million. Yeah.
Which could be small for a lot of private equity firms.
It's relative, and you're right. I've talked with private equity firms that will not write a 7-figure check.
Right.
So 3.8 is actually, I think you hit the nail on the head. It is relatively small for private equity. So anyway, so you got the private equity company to raise 3.8 million. What was your total raise?
4.3 million.
Okay, so math in public, $500,000 difference. Where would that 500,000 come from?
That came from the GPs,
Okay.
the three teams.
Okay, perfect. So the capital raise, you guys started trying to raise capital on your own, got a couple of weeks into it and wasn't working, reached out to private equity brought in 3.8. You guys reached into your back pockets collectively, and you got your $4.3 million capital raise.
Right.
Correct.
I think part of it too is we were around the holiday season when we started a capital raise, so we lost a little bit of time.
That's yes.
around that time period. The experienced partners had just closed on a pretty large property, so they were maybe a little bit tapped out on with their investment group as well. So there was all the stars were misaligned, I guess, almost.
Yeah, holiday closes. Oh my goodness. I've done a couple of capital raises where you start the capital raise in November and you're trying to close by the end of the year. I don't want to do it again, but I mean,
Right.
if I get another property under contract in September, I probably will, just because that's what has to happen. But yeah, I mean, people are more interested in family and turkey and things like that between end of November and end of the year. So it's a tough time to raise capital, but okay. So raised 4.3 million. Were there any other big hurdles between, contract and close that ended up being difficult to overcome?
I mean, due diligence, it's being new to me. It just seemed like it was standard in terms of, okay, just verify that we got the documents that we said we were going to get. And then Cory did the property tour as well.
Okay.
It was it wasn't perfect by any means, I can tell you that, but there was nothing that was down to the wire. There's a few things that the bank wanted towards the end that we needed to get, but it was honestly for our first deal, I felt it was pretty smooth, and I attribute that again to having some experienced help.
Yeah, that's a game changer. If you have somebody who's been through the process, a couple of times before, they can foresee a lot of the potential landmines, that you may not be looking for. So good point there. And glad it was relatively smooth for you guys, and that your experienced partners could guide you through that. So you closed in February, and I think you said February 28th, right?
Correct.
Okay. So this podcast will release obviously a little after we recorded, but roughly 2 months ago. Tell us how it's gone since.
I think it's going really well, actually. We are still in the midst of as far as the CapEx part of it, our plan is to do quite a bit of renovation. We want to rebrand the property, do a lot of exterior work, painting. There's some balcony repairs that need to be done, new signage with a new name. So really make that outside pop so that, it's going to fit in better with the B-class area. And then we're going to start to, as the units turn over, start to do interior. So we've done our market research, what's in the area, and maybe do a little slightly better than what other people are doing in the area, to bump the rents. But so the good news is we're able to bump the rents even more than we had budgeted for or underwritten for without doing anything so far. So that's one big plus.
Yeah.
Because there's, as you know, the contractors are very busy right now. So trying to get the bids and trying to get the numbers from them has been quite the process. So I think lets me procrastinate a little bit further.
Yeah. So a couple of things I'd like to point out there. I like the outside in approach, because I know a lot of people are doing inside out approaches, and I had a group who's actually looking to use me as a sponsor, send me their information today, and they had 100% inside out approach. All their capital expense dollars were on the inside. But something I've learned is, new tenants or even your existing tenants, they don't see the inside upgrades to other units, right? I mean, they don't see what's going on. They don't see it. But when you start upgrading the exteriors, now you can raise rents across the board because of the exteriors. Now you can attract better people. And now the tenants that are in place start seeing the management change. And it's like, oh my goodness, the parking lot is actually black now. There's no more potholes. Wow, they painted the exterior. That looks amazing, stuff like that. And they start to want to stay longer, and they're okay with paying more for it. So I am a huge proponent of the outside in approach, but not very many people come on and talk about outside in. And I like how I like where you guys' mind is out on that one, where you're doing the exterior finishes. Second thing I'll highlight is slightly better, I think is what your words were, than the comps. And you can't go, I think slightly better is where you want to be. You want to be either slightly below the comps or slightly above the comps. If you go too drastically on either end, you're not going to get the rent bumps. So if you go a lot better, you're not going to get rent bumps that you want.
Agreed.
Yeah, good points there. A lot of good points. All right, so now we come into the final stretch. So first question of the final stretch: what's next for you guys?
What is next for us?
What is next? Well, I have to finish our website so that everyone can go visit it and see a little bit more about us and what we're aiming to do with our business. We are also still looking for another property to invest in as well, as GPs. So ever since we've gotten under post-closing, our team has separated into respective roles for our strengths. And so our acquisition team is working on underwriting, and Cory and I are now involved in the asset management CapEx part of, the project.
Nice. Yeah. And something you mentioned, I remember when I was starting, there's a lot of people who kept on telling me I had to get a website done before, people would take me seriously. And it wasn't until we closed on our first deal that we got our website done too. So proof positive. Yeah, it helps. But I mean, there's a lot of stuff that, websites won't fix. But I'm looking forward to seeing that website. Let me know when it goes live. And, so next question: what advice would you give an aspiring investor who's maybe 6 to 12 months behind you?
Is it just one piece of advice, or can we give a couple?
You know what? We got plenty of time. So if you got a couple of, pearls of wisdom, let's have it.
I'm not sure if they're pearls of wisdom, but these are just things that weren't obvious to me a long time ago. So if you're thinking of doing it and you should do it, but you're scared, don't be scared. Just do it. You're gonna kick yourself later on.
Yeah.
We talked about this earlier, but I would highly recommend either finding yourself a mentor, finding yourself somebody experienced. It's worth the money to pay to get that experience. Like I said, we wouldn't be sitting here talking to you if we didn't do that.
Yep.
And third, I wish we had started educating our friends, our investor database, talking about what we're doing earlier, because I think we talked about before, we may not have had the situation where we couldn't capital raise everything in time. So I think, even if you don't have a deal, talk about what you're doing, like do backflips about it. Show people how excited you are, because this is really great. You can make a lot of money. We're passive investors in other deals, and I love it. Like, I don't have to do anything, and I make better money with great tax breaks.
Yeah, that number 3 is the key to raising capital, especially for your first deal. Is talk to people. Tell people what you're doing. Get people excited. If you're excited about it, excitement's contagious. And I think a lot of people, I have the same feeling on our first deal. I wish I would have started talking to people earlier, because our first capital raise, we didn't have super experienced partners with private equity, but it was painful is the answer, and it was only $1.5 million, not 4.25. So good points. Amy, do you have any? Go ahead.
It was stressful, right? That's where the yoga teacher comes in, helping with stress. So
yeah, the yoga. That's it. You take everybody through the yoga session. There we go. Amy, any other areas of advice that you'd add to that?
Not really. Cory, pretty much his third point was going to be my point, was even if you're currently passively investing in something, share that with the people because then the more they're aware of what you're doing, that gives a little more validity to what you're hoping to share with them.
Yeah.
And let them know it's possible to be an owner in an apartment building. Yeah. It may sound impossible, but it's like, if you own stock in a company, you're an owner, or you're an owner of the company.
Absolutely.
Right? So.
Yeah. And I think that's a good example that a lot of people can get around to can understand when you're talking syndications. It's just like owning stock in a company. It's common equity, and it's just like owning stock in a company. It's just now it's a property instead of, Coca-Cola or IBM or whatever. So
and you're a lot closer to the management. You're not going through some third party.
Yep. And you could actually go to the site and look at your investment, which is, go knock on the door of Coca-Cola and say, I want to check out my investment, see what they say. Right? Yeah. So anyway, last question. How can listeners learn more about you?
Well, right now we have 2 ways you can get in touch with us. One is through our email, and it's just simply Amy and Cory at ohmystars. So I believe that'll be spelled out in the show notes.
Yep.
And then we also have a scheduling platform through Calendly. So it's calendly.com/Amy and Cory. Try to be consistent.
Yep. Yeah. And that will absolutely be in the show notes. So anybody who's interested can just, click or tap and schedule a call or email them.
Yeah. If you ever have any questions, or, I know you have some newer listeners and newer people who are newer to real estate. We'd love to share our experience, give you any information that you can. So
awesome. Well, hey, thanks so much for coming on the show today. Very much appreciate your time, and hope you guys get your goals and get the next one pretty soon.
Thank you.
Thank you, Brian. I really appreciate it.
Hey, if you like that episode, make sure you hit that subscribe button. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans, yet, you are missing out. So get yourself 30 days free by clicking the link below in the description, or go to thetribeoftitans.info, and we'll see you there.